Hey, family. I am back again. It's your family member Q getting back in front of you to make sure you all are understanding your life insurance policies. I just read a post on Reddit and my heart really went out to this client because he was very upset because he thought his life insurance company changed his plan and then overcharged him in fees. So I read the post and I thought to myself, I know what I think, but I certainly would like to know what some of the other life insurance agents and brokers think about this as well. So, first, I'll read you the post and then I'll give you my input and I'll read to you what some of the other life insurance agents had to say about it. So, blank life insurance company wiped out our entire $58,331 investment behind our backs. That's the title. Okay. So this person goes on to say, I need some advice regarding bad faith practices by XYZ Life Insurance Company. In 1988, we purchased a permanent whole life insurance policy. We were promised that this policy would provide life insurance protection for my husband's entire lifetime, provided that we paid our premiums in full, which we did. Our policy has a guaranteed end of life benefit. The policy also has an additional rider for end of life benefit safeguard option, which ensures that the policy's payout to beneficiaries is protected and guaranteed. Now, just pausing right there, this is what the person really was most upset about because they felt as though the guarantees in the policy were not met by XYZ, fictitious name, insurance company. Okay, they go on to say, later we discovered that XYZ reclassified our policy behind our backs as a flexible premium universal life insurance policy, which is not protected from cancellation. XYZ then ascribed exorbitant cost of insurance fees associated with universal life policies to whole life policy that we purchased. Don't worry, I know some of you might be like, what in the world is she talking about? I'll go back through and make it make sense in just a second. Okay. This reclassification was their justification for taking excessive cost of insurance fees from our policy, completely depleting the cash value. XYZ eventually wiped out our entire $42,500 purchase value of our whole life policy with cost of insurance fees. So, in other words, they're saying they made these fees so high that it ended up eroding their whole cash value and everything. Then they said they sent us threatening letters resulting in three additional payments to them, totaling $15,831. XYZ then canceled our whole life policy and failed to notify us. They confiscated our entire investment of $58,331 plus in accrued interest. XYZ had to settle multiple class action lawsuits for hundreds of millions of dollars for these exact same infractions. We sought legal advice and learned that we have a valid case against them for bad faith practices, misrepresentation, breach of contract, and failure to provide notification prior to cancellation. However, our lawyer advised that XYZ gets away with this because they can outlawyer and outspend the average policyholder, as well as tying this up in court for years. I have reported them to every state and federal agency, attorney generals, and insurance commissioners, consumer protection sites, fraud lines, etc., without any success. Can anyone advise other actions that I may take to get justice? Okay, so going back, just to make sure we are all on the same page as what this post is saying. This person is saying that XYZ company sold them a life insurance policy and they were under the impression that it was a whole life permanent insurance policy. One thing that everybody needs to know is whole life is not the only type of permanent insurance. Permanent insurance applies to policies that are not for a specific period of time. They often do last your entire life, but some of them you actually can outlive because some of them only go to age 100. That's an example. However, another form of permanent life insurance is a universal life insurance policy, indexed universal life insurance policy, variable life insurance. There are different types of permanent life insurance. Whole life is just one piece of it, which that's going to come into play because they were under the impression that they had standard whole life insurance. Standard whole life insurance covers you for your entire life. Some of them go to age 100, but some of them also go, as far as you can go. You won't be able to outlive them. What this person is saying is that XYZ company reclassified their insurance plan from a standard whole life insurance policy to a flexible premium universal life insurance policy. What that is, flexible premium universal life is a permanent type of insurance similar to whole life, but not exactly the same. It is similar to whole life. And one of the main differences is that the end of life benefit is flexible, meaning you can adjust it up or down based on your needs. And your premium, also known as your monthly payment, can be adjusted up or down as well. So, I'm sorry, it's a gnat in here. I don't know why it wants to bother me. Anyway, so this person is saying that XYZ company just flipped a switch and changed it into something else. So here's my thought. Number one, I'm familiar with this company. This company has been around for a long time. I've actually done business with this company as one of their agents. And I have never heard of this company or any other company doing anything like this. Not to say that this person is wrong, not saying that at all. I would have to see their policy and comb through it and look at all of the parameters and all the benefits and all of that. But what I do know is that this is a contract. When you take out a life insurance policy, what you're doing is you are creating a contract between yourself and the insurance company that says, the person who is buying this policy, will pay into a pot so that later on, when I'm no longer here, my family member will get a lump sum check. Even if I only pay into it for a short period of time and I don't make it, my family is still going to receive this tax-free check. So that's the agreement that you make with the insurance company when you take out a life insurance policy. That's what it is. A life insurance policy is a contract. Well, just like any other contract, for example, say you have a real estate contract, you go to buy a house. You're not going to see in the contract on Monday, that you're buying a 3-bedroom, 2-bedroom ranch. And then when you get to closing, it's a 5-bedroom mini mansion. That's not how this works. So my thought is that this has this has been a flexible premium universal life insurance policy from the very beginning. I do fault on some levels the insurance agent for not making that clear to this policy holder at the time. Now, that's not to say they didn't. Sometimes you can explain something to someone, but they have something set in their mind that regardless of what you tell them, I know for myself that this is what it is. And that's the attitude they have. It could have been that. I'm not going to automatically blame the insurance agent. They may have done their job the way they were supposed to do it. It could be that this person just did not understand what they were getting. It could also be that the agent did not explain it the way they were supposed to. Who knows? My main point is this is a prime example of why, number one, you should definitely understand what it is you're getting. Number two, always choose an insurance agent who is going to go through these things with you, give you the opportunity to ask questions, explain everything that can be explained. It is very important when you take out a life insurance policy, when you buy one, that as soon as that policy is issued and you get your policy documents, whether it's by email, regular mail, however you get them, your insurance agent should be reaching out to you to do what is called a policy review. That means that they should be going over that policy with you to get your questions answered, to make sure that you know if there's a chance this policy could lapse and or cancel. If what happens if you only pay the minimum amount, because that is another feature, as I mentioned, of universal life insurance. The premiums or the monthly payments are flexible. You can adjust them up, you can adjust them down, meaning you can pay more, you can pay less. On certain occasions, you can skip a month and not even pay at all. Those are the benefits within that plan, which sets it apart from your standard whole life insurance, among other things. There are some other bells and whistles that differentiate them, but they are completely different. He thought he had one thing, and it turns out his policy documents say something completely different. Okay. So, one thing to note about flexible premium plans, universal life insurance, is that you want to be very careful of how much you pay into these plans. If you pay the minimum every time, then it is a good chance that your policy could lapse into the future. With this particular policy, it was long, long ago that he bought this policy in the 80s. I'm saying he. I don't know if this is a he, but this person purchased this policy back in 1988. 1988. That was a very, very long time ago. So that means this policy stayed in force for all of that time, right? So you have to be very careful and you have to know what it is that you're getting, because this could happen to you. They ended up losing all of their money, and here's why. If they were paying the minimum and the cost of insurance continues to go up, as it will because of inflation, the cost of bread is going to go up, the cost of cheese and milk and eggs, the cost of funeral services, everything is going to go up. Everything is way more expensive in 2026 than it was in 1988. So, in order to keep your policy in force and use it the way it's designed to be used, especially for these types of policies, you want to pay more than the minimum, because you want a portion of your payments to go into that little, what I call built in piggy bank, which is also known as your cash value. That built in piggy bank, you need to keep putting more and more in there so that they can act like that backup savings plan or that emergency savings account for you. And then you can access and borrow from it all the things that you want to do. That is why it's structured that way. So, unfortunately, this person was really slighted, but there was a seasoned life insurance agent who responded to them. And although the response was very straightforward, no holds barred, I actually loved the response because I was thinking along the same lines. This person said, they didn't reclassify your policy. A policy is a legal contract. Whole life does not magically turn into universal life. It sounds like you didn't pay enough into your policy to keep it going, so it lapsed, which is exactly what I was saying. You're mistaking the illustration, which is basically a printout or an estimation of what you could accrue in your cash value account. You're mistaking the illustration's current projection as a guarantee. On an illustration, it shows you how much you could earn in interest if the interest remains as high as it is when you take out the policy. It also shows you the minimum guarantee. So that's another thing within these universal life policies. They have a minimum guarantee so that you're not going to receive less than a certain amount of interest on your cash value. Then they say, there's no way your original illustration shows it guaranteed for life at that rate. Otherwise, they would be violating the contract. I hate to be the bearer of bad news, but as much as the situation sucks, that's a technical term, by the way, as much as the situation sucks, you didn't understand how the policy worked. They sent you an annual statement every year describing how long the policy would last based on your payment amount. Remember, I talked about that minimum payment? If you make the minimum, it's not going to keep that policy in force because they're going to have to take the additional higher cost of insurance out of your cash value. And eventually it's going to erode it all the way down. Okay. Then they sent you an annual statement every year describing how long the policy would be, how long it would last based on your payment amount. Then it says cost of insurance increase, but still fall within the contracted amount. Interest paid was lower than anticipated when you bought the policy. The policy crashed because it ran out of cash value. That's why they're telling you that the payment increased. Basically, they're saying exactly what I said. If you pay the minimum amount is just the amount to keep the policy active and in force. But a good portion of that is going to have to be used in order to insure you altogether. Because remember, at the end of your life, your family is still going to receive that tax-free lump sum check. So, for example, if you take out a policy for 100,000, right? And let's say it's a universal life insurance. Let's just pretend that, you have to pay $89 a month for this policy. Well, if you pay $89 a month, it'll stay in force for a long time, 30, 40 years. But what happens is, as time goes on and the cost that the insurance company takes on in order to make sure that they have enough money to pay out to your family members, as that goes up, the amount that you have in your cash value, whatever the difference is, they're going to have to take it out of your cash value to make sure that that policy stays in force. So that's something to think about. I do not recommend universal life insurance or indexed universal life insurance to anyone who is not using it as a strategy. It is a wealth transfer strategy. It is life insurance and it's not an investment. So I want to make that clear. It is not an investment. It is a wealth transfer strategy. It is a strategy to make sure that your family receives a lump sum of wealth once you are no longer around. So I hope this has been helpful. This is something that a lot of people don't think about. A lot of people are not aware of universal life insurance. I'm just starting to get more questions and more people reaching out to me about, especially index universal life, because on my social media, I talk about index universal life for entrepreneurs, especially my truckers. You can use your index universal life insurance, your cash value from that for truck repairs. I've heard stories of dispatch sending you in the wrong direction, so you have to, get extra diesel fuel and all of that good stuff. You know, that's though that's just one strategy that you can use it for. But again, I don't recommend it for just the average everyday person who needs coverage. So before you even think about taking out a policy, make sure you talk to an agent who knows the difference between these policies, can explain it to you in detail. Make sure that you understand exactly what you're getting, how it's going to affect you. Make sure you understand that there are costs associated with this, and come up with a strategy to get around or circumvent, I guess, or Euro step around those fees, making sure that you have enough to cover those fees through your monthly payments. So, again, I hope this has been helpful. I hope it was understandable. Feel free to ask questions if you don't know what I'm talking about. If I made it worse, I'm sorry. Just, I'm happy to re explain it if need be. I just want to make sure that people know these things before you go out and get life insurance, because most people, especially working adults, especially parents, especially business owners, all of these folks, including me, should have life insurance. I have life insurance, as they used to say with in the old commercials, I'm not just a representative, I'm also a client. So, with that being said, please like and follow my page for more content like this. And I appreciate you. Take it easy, family.